Hello, folks. It is Saturday, October 28th. It's about 3 o'clock in the afternoon on the East Coast of the United States. In this video, I will be talking about the Magnificent Seven stocks. They're all tech stocks. They all trade on the NASDAQ. I guess they're also on the S&P. The reason I'm looking at them is they are the drivers of essentially all of the gains, evidently in both NASDAQ and S&P 500. I'm not sure about the Dow. So anyway, let me share my screen here and we will get started. So this article, I want to highlight there, it's October 19th. So it's 9 days old at this point. So this article came out before earnings, the announcement of earnings started. And so there's some interesting points in here. So it's making the point that bond yields are dulling the allure of equities. Stocks aren't as exciting when you can go put your money into a 30-day U.S. Treasury and get over 5% return. They don't mention it in this article, but you can also, competing with stocks at this point, you put your money into a money market account at 4.5%, thereabouts. And so anyway, stocks have competition at this point. Here's where they're saying, let's see, that the Magnificent Seven, and there's the list, if you're not familiar with the stocks in the Magnificent Seven, driven nearly all of the S&P 500's 12% year to gain. And of course, this was based on 9 days ago because of their outsized weighting in the index. And remember that the S&P 500 is a weighted index where different stocks have different weightings, larger or smaller effect on the index as they move up and down in price. So Magnificent Seven average price to earnings ratio of 33.5 compared with the S&P 500 P&E of 18.3. So basically saying that those seven stocks are trading at almost double the PE ratio of the average stock in the S&P 500. Government bonds are acting as competition to stocks. The point I would make here in regards to this PE ratio, it doesn't matter what metric you pick for stocks right now, they are horribly overvalued. And I'm a firm believer in reversion to the mean. Everything in this universe operates in cycles, including the financial markets. And so at some point, we will see the stock markets revert to the mean. And at this point, the mean in the stock markets is far lower than it is today. So returns in the S&P 500 driven entirely by returns in the biggest seven stocks, the Magnificent Seven. And so again, there's nothing going on in stocks other than the Magnificent Seven. And so that was why I was sharing this article. It's just it captures some of the key ideas to keep in mind. Because these are all tech stocks and listed on the NASDAQ, I'm going to look at the NASDAQ index charts. This is the daily time frame. And if we zoom in here, we can see that in the past week, we've lost a significant support level here. This was, what was that, Wednesday. So on Wednesday, price pushed through that support zone, or what could have been a support zone, and closed below that level. And then the downward movement continued on Thursday, pushing down towards the 200-day moving average. And then on Friday, we both basically just got a non-decisive action one way or the other. Neither new high nor new low. Being this close to the 200-day moving average, that becomes an obvious price target. Reasonable to expect that the NASDAQ will reach that level before bouncing. So just did a pause on Friday, but I would expect a touch, at least a test of the 200-day moving average before we get a bounce, if we get a bounce at all. So, and that remains to be seen. This is NASDAQ in the weekly time frame. We can see that the 10-week moving average has been acting as resistance for the last several weeks. And then in the past week, price dropped away from the 10-week moving average and has now tested the 40-week moving average. And we got a little bit of a bounce from that level at the end of the week. And that was Friday's bounce, evidently. MACD, we can see, is overbought and currently on a sell signal. Now still in bull mode, which of course suggests that the primary trend in NASDAQ remains to the upside. And yet it is overbought based on MACD. Energy is very low. Let's look in the monthly time frame. This is a long-term chart. Obviously, this parabolic curve has been providing support. Here it is, support, 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 and currently we're in this big upward movement after bouncing off the support level, obviously having a pullback from that bounce. We'll see. Obviously, we've got support. Basically, we're nearly at support. That's where I would draw the next support level in this monthly time frame, and you can see that we're bouncing. We've got a little bit of a lower tail on that candle, so a little bit of a bounce from that potential support level in this monthly time frame. That's stochastics. Those are not the typical order I show them in. So bull mode in MACD on a buy signal currently. Energy is elevated. So again, uptrend remains, or the primary trend remains to the upside in this large time frame. Now let's jump into the Magnificent Seven. This is Big T, Big Tech ETF. It's short term. It just started in April of this year, so hasn't been around long at all. One of the remarkable things about this chart is the accumulation distribution indicator, which is it shows us whether investors are accumulating this stock, adding it to their portfolio, holding the shares that they currently have, or if they are divesting themselves of these shares. And we can see, obviously, that investors are bailing on this ETF. Now it's not a big ETF. It's fairly small. I think it's a couple $100 billion. We'll see here in a second. So not a big ETF, but clearly investors are not holding this ETF. They are running away, run away. If you've seen Monty Python, from this vehicle, we can see 10.5% loss in the last 2 weeks. That's pretty ugly as an investor. That's a big loss to experience in a 2-week period. These are the holdings of this ETF. It's the Magnificent Seven. What's interesting about this ETF, or scary about this ETF, if you're risk averse, as I am, is that it invests in swaps. And so it's holding shares of each of the companies, but then also holding a swap position. and a fairly significant swap position. 9.5% of the ETF's value held as a swap. And if you add up all of the swaps, basically it's, more than half of this ETF is swap positions, derivatives, which, obviously very high risk. And so anyway, high risk ETF. It's Round Hill Investments that runs this big T ETF. It's actively managed. There's the Magnificent Seven, their company logos. Yeah, 6 million. Oh, I said a couple hundred million. It's only 6 million. So tiny, 6 million. Very small ETF, 210,000 shares issued. They do have options trading against it. There again, that's the holdings, and we can see that the largest holdings in this ETF are swap positions. That's scary. I think that's all I wanted to show in there. All right, so now we're going to look at the individual stocks, the 7 stocks. We're going to look at a daily chart and a weekly chart. Here's Apple in the daily time frame. Thursday pushed below what could have been a support level from this prior low and appears to be targeting the lower median line of this shift pitchfork. That would be my next price target. Notice that we got a definitive and impulsive penetration of the 200-day moving average, which of course is not bullish by any means. That's a bearish indication that price would so decisively push below the 200-day moving average. Accumulation distribution, it looks like investors pretty much holding on to what they've got at this point. We can see a decline when price dropped off back in August. We got some investors shedding their shares, but basically flat from that point forward. We're in bear mode, suggesting that the primary trend is downwards. Energy is very low. If we look at this chart, we can see that it's in a technical downtrend. So we got a high, a low, a lower high, a lower low, lower high, lower low. So definition of a downtrend in Apple in the daily time frame. Apple in the weekly. This past week, we can see again a decisive push below the 40-week moving average, a push below what could have been a horizontal support level. Bull mode in MACD on a sell signal currently. Energy is low. Google in the daily time frame. This is an ugly chart. Big gap down. And so that was probably an earnings announcement in this past week that I haven't looked, but my guess would be, if we looked, that Google had disappointing earnings announcement and investors bailed on them. Big gap lower down through both the 20-day and 50-day moving averages and through that simple trend line. That's a big gap. Cut below, closed below, that was Wednesday, closed below this potential support at this horizontal level, and then another gap lower on Thursday. So investors weren't happy. They hadn't beat up this stock enough on Wednesday. They beat it up some more on Thursday. Reasonable to expect that the next price target is the 200-day moving average. There is a potential support level right in there. Notice that we have an open gap. Let's highlight that. And also acknowledge that in the financial markets, price does not like open gaps. And so if we get down to this 200-day moving average, it would not be surprising at all to see a push lower and a filling of that gap, which of course would take price below the 200-day moving average. And so not a pretty chart, not a good forecast going forward. Again, I would suggest at least a test of the 200-day moving average and probably a push below that, at least a temporary push below that level. Notice that volume is rising, and that's never a good thing to see when price is falling. That's a bearish indication that you get rising volume on declining price. Mostly flat in the accumulation distribution. MACD is dropping down into bear mode, currently on a sell signal, energy very low. So again, just not a pretty chart. This is Google in the weekly time frame. It lost, what is that loss? That's not right. 10%. So almost 10% last week, 9.9% loss in a single week. That's not pretty. Big spike in selling volume. Obviously, red bar is selling. And so, investors bailing on that stock last week. Again, I would assume it's based on they had disappointing earnings. MACD in this time frame is in bull mode, suggesting that the primary trend remains to the upside. Let's keep rolling. This is Meta or Facebook. Again, Wednesday, a push down below the 20-day and 50-day moving averages. We got a close below the 50-day moving average on Wednesday, and then a further drop, a gap lower Thursday before bouncing. Pretty strong bounce on Thursday from this horizontal support level, and then a little bit of a follow through on Friday. We actually got a green candle and a little bit higher close on Friday. Rising volume as price was declining there. Flat accumulation distribution. MACD mostly in bull mode, currently on a sell signal. Energy is low. Let's look at the weekly for Facebook or Meta. Basically a bounce off this support level, horizontal support level. We can see in a pretty well defined, there it is, resistance, breakthrough, support, and now price appears to be playing with that level as support again. Rise in volume, selling volume, overbought. So based on MACD, this stock is very overbought, extremely overbought based on MACD. Let me draw that line just so you can see what I'm talking about. I say this all the time, MACD is not a bounded indicator. MACD can go to infinity in either direction, but prior highs and lows in MACD tend to act as, bumper rails, levels where price quite often reverses. Now we can see that that didn't happen this time. MACD actually pushed above these prior highs, but has now rolled over and is pulling back into that level. So anyway, very overbought based on MACD. Energy is about mid-range. Microsoft in the daily time frame, big gap upwards on that was Wednesday. So I would assume, I haven't looked, but I'm just guessing based on this chart that Microsoft announced earnings after the close on Tuesday, gapped up on the open Wednesday, and then has been in a steady decline ever since that basically these were traders playing the earnings announcement and then quickly bailing. Note the big rise in volume. And again, red bars are selling volume. Currently finding support at, this is the 20-day and 50-day moving averages are both coincident with one another, acting as support. MACD in bull mode, still on a buy signal, but it looks like we're about to get a sell signal unless price can reverse to the upside. Energy is very low. Note that Friday's candle is bearish, longer upper wick than lower wick. That's a doji. So anyway, not a bullish candle on Friday. This is Microsoft in the weekly time frame. What I noticed looking at this chart is that we could draw a cup and handle formation, which, you know, it's not a pattern that I typically look at, but I just happened to see it when I was looking at this chart. That's a bullish pattern, would suggest further upside in Microsoft. We'll see. You know, we could also point at these candles, these two candles in particular, this one and this one, with those long upper wicks, that they look very toppy, like this stock is topping out prior to rolling over. You know, time will tell. Bullish volume, you know, obviously we had a lot of buying volume last week, which is bullish, obviously. MACD in bull mode, currently on sell signal, energy about mid-range. So Microsoft, of all the charts we've looked at so far, Microsoft is the most bullish. Amazon, based on this chart, I would assume disappointing announcements. They probably announced Wednesday or Tuesday after the close. Disappointed, got a big drop on Thursday, bounce on, big drop on Wednesday, a bounce on Thursday, and then a big gap higher on Friday. And they made an announcement on Friday, which we'll see here in a moment. That's why we got the bullish gap higher on Friday, and on big volume, which is always bullish. Price movement to the upside on high volume is a bullish indication. MACD in bear mode currently are still on a sell signal. If this upside movement continues, obviously we'll get a new buy signal from MACD, energy rising up through the mid-range. Amazon in the weekly time frame, test of the 40-week moving average last week, and then a big bounce from that level. So bullish candle last week in this weekly time frame, nice volume, overbought based on MACD and this prior high in MACD back in July. Notice, however, if we go back into, this is mid-2020, MACD was far higher than it is currently. So we could make the argument that MACD could move all the way up to this level. And again, MACD is not a bounded indicator by any means. So MACD can go as far as it wants, to infinity and beyond. Energy pushing up towards mid-level there. So let's look at, this was Friday. So Amazon announced a stock split, 20-for-1, and then a $10 billion buyback. Now, in my opinion, buybacks should not be allowed. That's not, in my mind, that's just pure manipulation of a stock's price. Management does that to push the stock price higher. But anyway, that's why we see the bullish action in Amazon on Friday is the announcement of this stock split and a $10 billion buyback. So Tesla in the daily, ugly. That would be my one word assessment. Big gap lower. That was the prior week. So that was Friday, let's see, Thursday, Wednesday, Tuesday, Monday. Yeah, Friday. So that was Wednesday of last week, and then a big drop lower Thursday of last week, and then mostly sideways action during the week that just closed. I wonder if Tesla announced earnings on past Friday. So not sure without looking. Bearish price action, this big gap lower and then sideways consolidation. Notice that it pushed below what could have been a horizontal support level, coincident with this prior low here, this prior high, but pushed below that level, actually tested it from below, and then dropped back to the downside. So very bearish price action, declining volume. So at least if you've got price dropping along with declining volume, it's not as bearish as it would be if volume was rising while price dropped. So MACD in bear mode on a sell signal, energy very low. So again, not a pretty chart in Tesla. Weekly time frame, same comment, big loss. That was 15.5%. So big loss in the week prior to this week that just closed, and then a continuation of that downward move in this past week, pushed below the 40-day moving average and closed well below that level. So bearish action there. MACD on a sell signal, but in bull mode, energy very low. So Tesla not looking pretty. Oh, I think one of the announcements they've made in the last 2 weeks is that the sales of the Cybertruck, I think that's what Tesla's calling that truck vehicle, sales are not up to expectations, that it's going to take longer to reach their sales goals than they had expected. So this is NVIDIA in the daily time frame. Remember that the excitement about NVIDIA is all based on AI, artificial intelligence. So we got a big move in NVIDIA. That's this big gap upwards, and then basically sideways action since that point. Drop below both the 50 and 20-day moving averages, and currently testing support at this horizontal, resistance support level. Flat in the accumulation distribution, MACD in bear mode on a sell signal, energy very low. In the weekly time frame, again, big move higher when the excitement launched about AI, basically sideways action since that point. And, not unreasonable to see sideways action after a big move like that. So basically a stock, or it doesn't matter what kind of financial vehicle we're talking about, it takes time to digest a big move, and that was 24%. So in 1 week, NVIDIA gained 24%. So, very large move. And so sideways action is not really surprising. Let's see, very overbought based on MACD. Again, not surprising after a big move like that. So I guess my expectation for NVIDIA would be for sideways consolidation as ongoing, digesting this big move. but nothing really bearish about this chart, either the daily or the weekly time frame. These charts, this is looking at the number of stocks in the NASDAQ index that are currently above their 20-day moving average. And we'll look at both the 50-day and the 200-day moving average, same thing. One of the things I notice when I look at this chart, and actually all three of these, is that for as far as finding a buy point, the real decisive move the move in price occurs after this this part of the chart makes an upward tick. And so if we look at the current action, it's still pointing downwards, which, based on my assessment of this chart, I would not be a buyer until I saw at least some kind of uptick in the upper part of this chart. That basically the stocks in the NASDAQ index were moving back above their 20-day moving averages. Currently, we've still got them dropping below that level. Similarly, in the stocks that are above the 50-day moving average, I'd make the exact same comments that until this part of the chart moves back above, makes an upward movement, we aren't at a buy point. Obviously, when this moving average gets down to the buy level, what I have marked as the buy level, those are pretty good points to buy. We can see if we look here and price made an upward move. If we look here and price makes an upward move. Back here, price made a big upward move, etc. But the point I want to make with these three charts is until we see an upward tick, I would not be a buyer. Same thing, 200-day moving average or 200-day, the stocks that are above the 200-day moving average still pointing downwards. And again, until this vehicle makes an upward tick, it's not giving us a buy signal. So there's the upward tick, and we can see that price moved upwards. There's an upward tick, price moved upwards, but we haven't gotten there yet. So based on those three charts, it suggests to me that at best we have sideways action in the NASDAQ and these big tech stocks, because again, it's the only thing happening in the NASDAQ is the big tech, these seven magnificent seven stocks. And so anyway, sideways action, if not continuation of the downward move that we saw in this past week. So that's all I've got in this video, folks. I just wanted to look at these stocks in particular because these seven stocks basically represent all of the gains in the S&P 500 in 2023, and they are the current movers and shakers in the NASDAQ. And so if these stocks don't hold up, the S&P is going to head lower and the NASDAQ is going to head lower. So anyway, I will talk to you soon. Enjoy your weekend.